Coop, I think you're ready to go.
Okay. Welcome, Donna. Just in time. So we're going to go ahead and get started. Again, thanks everyone for joining, especially on such a nice evening such as this. Really beautiful out. So I appreciate you taking the time to join, learn a little bit about cryptocurrency, Bitcoin, blockchain, all that fun stuff. Just a few housekeeping items before, just to get started. Like I said, please feel free to turn your camera on or off, whatever you're most comfortable with. I do like seeing faces, so I will say that. And then in addition to that, just to make and prevent any
Where's your volume down here?
Substantial audio feedback. Good timing, Donna. If you wouldn't mind just kind of keeping on mute when you're not actively talking so we can prevent some of that audio feedback, that would be great. Second, we are recording this episode, so if you want to go back, look at it, review, or share it with anyone, please feel free to. And then third, we will save time at the end for questions, Q&A. So what would probably work best is if we save most questions until the end, if we can. If something comes up and you absolutely want to get it out, please use the chat function in Zoom below, and Ray, Robin, and Catherine are going to monitor that for me. And if something is prevalent and can be kind of covered as I'm going through things, they'll stop and ask that question. If not, we'll just wait until the end for that. Okay. So without further ado, let's jump into the presentation. And I'm actually going to have to take my AirPods out for this part.
$56 pass. I wasn't prepared.
What I want to do is actually start with a quick video. Some of you may have seen this video before, but I'm not going to give any context. We're going to watch it, just a quick minute and a half, and then we'll talk about it.
Translate that as I was doing that little
Can everyone hear that?
Oh, that's
that little
right.
mark with the A and then the ring around it. Back now at
Could everyone hear that? Just so I want to make sure. Yeah, okay, great.
6 pass. I wasn't prepared to translate that as I was doing that little tease.
Oh, that's
that little
right.
mark with the A and then the ring around it.
At?
See, that's what I said. Katie said she thought it was about.
Yeah. Oh.
But I'd never heard
Or
it.
around
I'd never
or
heard it
about.
said. I'd always seen the mark, but never heard it said. And then it sounded stupid when I said it. Violence at NBC.
Yeah, I heard around or about in the lunchroom the other
See,
week.
there it is. Violence at NBC, GE.com. I mean,
Well, Allison should know.
what
do you
is
think about
internet
Allison?
anyway?
Internet is that massive computer
Right.
network, the one that's becoming really big now.
What do you mean? That's big. How does one? What do you write to it like mail?
No, a lot of people use it and communicate with. I guess they can communicate with NBC writers and producers. Allison, can you explain what internet is?
No, she can't say anything in 10 seconds or less.
Oh, Allison will be in the studio shortly.
What is
What
it?
does it mean?
It's a giant computer network made up of started from.
Oh, I thought you were going to tell us what this was.
It's like
You
a
looked in the
computer
dictionary.
billboard.
It's not an. It's a computer billboard, but it's
Right.
nationwide. And it's several universities and everything all joined together. And
Right.
And others can access it.
And,
Right.
And it's getting bigger and bigger all the time.
It
Just
came
great.
in really handy during the quake. A lot of people, that's how they were communicating out to tell family and loved ones they were okay because all the phone lines were down.
I was telling Katie another
But you
time.
don't need that. You don't need a phone line to operate internet. No.
Okay. So, So, who here, just watching that video, looking back on it, it's a little funny, but who here in the group could tell me exactly how the internet works and all the technology behind it? Is there Anyone who's brave enough to speak out and say and try to give it a try. Okay. That's what I was guessing because I couldn't explain it either, right? But who here, even though they don't know exactly how it works, who here uses the internet in their daily lives? Yeah, everyone should be raising their hand, right? Because you're using the internet right now to be on this call. And the same can be said about a lot of other things that we use in our lifestyles, right? So think about how a car operates. There's a chance that maybe one or two of you actually know how a car engine turns gas into kinetic energy and then movement and all the science behind it. But chances are, you don't know how it actually works, but you know what it does. You use that to bring value to your life. So that's what the key is here today, going to be with cryptocurrencies. We're not going to open up the hood of the car and explain every little piece and part, but instead just try to help you understand what it does, right? What the purpose is, and how it might be able to provide value to our world today and into the future. Fair enough with everyone? Cool. So, in getting started, and that kind of brings us to our quick agenda, what I wanted to do to start is kind of set a baseline on our current money system and kind of help you understand where we are today, where we've been in the past, to better explain the evolution of cryptocurrency. And that's going to lead into what is the purpose of these cryptocurrencies? Why have they been established? What do they do? What's the meaning behind them? And then we're going to talk about, okay, where did it all start? What are some obstacles it's had to face and where the future might look? And then to end it, we're just going to share a little bit about our own firm's philosophy on it from an investment perspective, and then open it up to Q&A. So before I dive into things, is there any questions, or is anyone having any trouble hearing me or anything like that? Perfect. So, the evolution of money. So the evolution of money, if we're looking at this, where did we start? To give us a solid foundation, what I wanted to do was explain, okay, what are the properties of money? What actually makes money money? And so the first property that has to exist to me, a successful form of currency, is it has to be stable and durable. So this makes sense, right? If, let's say, the currency were to jump up and jump down in value from day to day, or be worthless one day and worth an immense amount of money the next day, that wouldn't lead to a lot of confidence in the current financial system. And it would lead to a lot of concerns and problems because of that. So the dollar today is pretty stable. You know that $1 is going to be worth $1 today, and $1 is going to be worth $1 tomorrow. So that's one key component. The next key component is it has to be portable. So you have to be able to move it back and forth. You have to be able to transfer it from one person to the other. Third thing, it has to be divisible. And again, this makes sense because if we just had one massive ball of gold everyone had to share, there wouldn't really be any way to break that out and share it and do as we need. And then the final property of money is there has to be some sort of limited supply or scarcity. And so again, this makes sense because people wouldn't be very motivated to go to work and earn a living and save and invest if instead they could just walk out their front door and pick up dollar bills off of their front lawn. So, we got someone who Let me see here. Who wouldn't mind just staying muted? That would be great. So those are those properties of money. And for a currency to operate as an effective currency, it has to have all of those four properties. Now, where have we been in the past? What system did we originally use? I think all of us will know or remember that we started in a barter system. So how did the barter system work? Well, you had something of value and you took that item of value and then you exchanged it with another person for what you deemed as equal levels of value. So you went directly to that person, you mediated the transaction, the two of you, and by the end of it, you felt good that you got your goat and he got his chicken. And that's what they call a peer-to-peer system. Now that system, it worked well, but over the course of time, we realized, okay, there's probably a better way to do this. And so we evolve, we adapt. Human beings, we're always trying to improve, right? And so what did we instead use instead of these random items and objects? Well, we started using scarce resources, gold, silver. And again, this worked much better than the barter system, but there were still some inadequacies involved. Like it wasn't the best idea to be carrying around massive amounts of gold and silver and trying to trade that. And it wasn't as easily divisible as it could be. And so what's the next evolution from there? Well, that's where fiat money comes in. You may or may not have heard the word fiat before, but what that means is that the money itself has no intrinsic value whatsoever. So it's just paper. And what actually gives that value is that, one, we all accept it, right? So there has to be a lot of trust and everyone has to embrace that. But also the bigger key player is that it's guaranteed by some sort of institution, bank, government. So you know that that $1 is worth $1. And this is where we get into the world of a centralized money system. So now, instead of in the barter system where you went from one person to the other and you mediated that transaction, now you always have a middleman for every transaction. So you go to the bank, you go to the grocery store, you use your credit card, which is through a bank, and they control and track every transaction that is completed. Now, this system has worked for us, but again, human ingenuity, we're always thinking of, okay, how can we improve this? And that's where cryptocurrencies have now come into play. And what they've done is they've said, okay, well, is there a better way to do this? Is there a more efficient way to do this? And how could we possibly do this and take out that middleman, take out the institutions, take out the banks? Because if you look at it, across the world, there's roughly $80 trillion in some form of currency money out there, $80 trillion worth. If you take into account all the fees that take place from exchanging currencies and transactions and wires and all of that fun stuff, that's over $1 trillion in costs going directly to these banks. So if you could remove that, well, wouldn't it work a little bit better and more efficiently? And we're going to talk about how that happens in just a second, but that is that next evolution into cryptocurrency. And remember, today, what money actually is we're becoming increasingly more digital every day that passes. Less and less money or dollar bills are in circulation, and more transactions are being completed digitally. So if we just think about how money works today, it's simply a system of record keeping or in other words, just a way of keeping score. So these centralized systems, these banks, these institutions, what they do is they keep this digital ledger or score of how much money you have in each account, and they interact and talk with other banks to make sure that everything functions appropriately. So again, our world is going increasingly more digital, and we're embracing that. So what is that next step? Well, that's where you bring in the purpose of cryptocurrency, right? And the main leader in cryptocurrency right now is Bitcoin. And so that's where we're going to focus most of our attention today on. Just because there are thousands and thousands of cryptocurrencies out there, and we just can't cover all of them. So introducing Bitcoin, right? What is Bitcoin? What is its goal? Well, its goal is to create a decentralized, fully digital money system. Or in other words, cut out all of those intermediaries. But if we're thinking about this, money as digital files has always been a really challenging proposition. Because again, I could just copy and paste my money, I probably would. And I'm guessing everyone on the call would at least think about, hey, let me just duplicate these funds just real quick. And so there has to be controls in place and established to prevent that from happening. Those controls right now are the banks, the governments, the institutions, and all the regulations. What are those controls when it comes to Bitcoin or other cryptocurrencies? The blockchain. So I'm sure most of you have heard the words blockchain, but you might not exactly understand how it works or what it is or the technology. And so again, I don't want to get in the weeds of the technology itself, but at a high level, just explain how it functions. And to get started, the first thing you have to understand is just like how you have a wallet right now with all your credit cards and things like that and cash in there, in order to transact in cryptocurrencies or Bitcoins, you have to have a digital wallet established. So what a digital wallet is, and it's very simple and fairly straightforward to establish. There are apps, you can do it online. The most safe way to do it is actually with a physical hard drive that you use. But you create this Bitcoin wallet, and each wallet has two different numbers or keys associated with that wallet. The first is your public key. So think about how email works right now, right? You have a public email address that you can provide to people, and then they have a method to communicate and send messages to you. That is exactly how it works with wallets or digital wallets. Your public key is kind of like your email address or your account number. This is what you give to other people, so then they can initiate a transaction and send you money or vice versa. Now the private key, again, think of this like your account password or your email password. This is what actually gives you access to what's inside the wallet. And oftentimes you'll see that this is many digits and a very long, complicated password. And that's done purposefully. Because if someone gets access to this key, they have full control of any and every assets in that wallet. So you have to be very careful with this. And on top of that, there is no account recovery. There's no password recovery. So you can't just say, hey, forgot my password, send me an email and I'll reset it. No, if you lose that password, you lose everything in that digital wallet. So there are thousands and thousands and millions of dollars out there in digital wallets where people have lost their private key and it will never be accessed again. It's gone forever. So we understand, okay, you have to have this wallet, and just like email, you can send things back and forth via the internet, right? But how does it actually work? How does it actually function? I want to just give you a high level example. So let's say you have Bob and you have Susie, right? Bob runs a successful pizza restaurant downtown. Susie is on her break, looking for a bite to eat. She goes into Bob's restaurant and she says, "Hey, let me get a pepperoni pizza, please." He makes the pizza. She goes to pay. And to her surprise, Bob actually accepts Bitcoin as a method of payment. Well, Susie, to her delight, set up her Bitcoin wallet for the first time last week with her granddaughter and is like, okay, let me give this a try. Let me try to do this. She goes into her phone, she accesses her wallet with her private key, and she transmits a message, which in the phone will just be a click of the button, saying, I would like to push 1 Bitcoin from my wallet to Bob's wallet in exchange for this pizza. Well, what happens with that message is really what's key here within the technology, because it is pushed out to a massive network of computers and what they call nodes that is then gets the message and can either confirm or deny the transaction. And the key in confirming the transaction is every single transaction ever completed in Bitcoin is public knowledge and out there to the public. So all of these high-powered computers are able to track exactly who has what Bitcoin at any certain point and confirm through, again, we're not gonna flip the hood on the engine. We're not gonna understand exactly all the science that goes behind it, but through the code, through the technology, through the hash functions, all of these computers are able to confirm that Susie is who she says she is. She has the Bitcoin that she says she has, and give the green flag for that transaction to go through. At that point, 1 Bitcoin is pushed over to Bob, and they go their separate ways, happy and well fed. Now, you might ask the question, okay, that works all great and dandy. In utopian society, everyone would be willing to create these computer programs to confirm all these transactions and everything would work. But we know in reality that if someone's going to work or confirm transactions or put effort into something, they're going to be demanded to be compensated for it. And so that's where Bitcoin mining comes into play. Every transaction that occurs and is confirmed, and let me just make one further addition on the blockchain, is that each transaction is confirmed by every computer. And so it functions very, very well in terms of confirming and confirming transactions, because every computer has to agree and confirm. It's not, oh, just one can say, okay, I approve that. No, and that's why a lot of times you'll see, and we'll talk more about this, is the sheer amount of electricity and computer power it uses, because all of these transactions have to be confirmed by the blockchain and all of these computers. So now how does the mining come into play? Well, each transaction that happens, there is a new, very, very small piece of Bitcoin that is newly created, or what they call mined. And again, we're not going to go into the code on how this works, but each transaction, a small piece of Bitcoin is mined, and that is what all of these Bitcoin miners are compensated with. So they get these small pieces of Bitcoin, and over the course of the next 100 or so years, all the available Bitcoin will be mined, and there'll be 21 million Bitcoins out in circulation, and that's it. After that, it's all done. No more mining. So that is about as granular as I wanted to get on the technology itself, how it works, how it functions. But before I transition just a little bit, I wanted to stop and see if we have any questions on what I just covered specifically. And hopefully not every single one of you are completely confused and lost and in left field.
Okay, so who owns the technology and all these computers?
Just everyday people like you and I. Anyone who has the money to be able to build a powerful enough computer can start mining themselves. Now, it's grown in popularity, and a lot of Bitcoin mining centers have been established overseas by bigger companies and things like that. But anyone can be a miner if you have the internet and the electricity to do so.
Okay, so there are people obviously making decisions since someone or somebody's said all the Bitcoin that there ever will exist will have been mined by 2140. Who are these people? And why should anybody trust them? And what happens when they meet their demise?
It's a great question. That is actually where I was going to next. So where did all of this get started? How did it all come into fruition? And did it just magically appear one day? So, John, unfortunately, I don't have the answer to that, and no one does, because how Bitcoin was established was just by a release of a white paper back in 2008. And the author of the white paper actually went through via an alias of Satoshi Nakamoto. Now, we know that's not who that person actually is. We all only know is that it was a computer programmer, and for some reason they wanted to stay anonymous. But what you'll notice, John, is the date in which it was released. Does anyone remember or know what was going on 2008, 2009 time period? Yeah, the Great Recession of 2008, the global financial crisis, where a lot of people lost a lot of faith in our banking system overall. And so this system was created as a result of that. Saying, hey, why do we have to have these institutions? Why do we have to have these banks? Why do we have to put all of our faith in them? Is there a better way to do it with the advent of technology and the internet? And so this white paper laid the framework and the coding to create what Bitcoin is today. And again, I can't explain granularly exactly how that white paper turned into Bitcoin, but you're right, John. There is nothing backing it whatsoever. Nothing backing cryptocurrencies. The only thing that would back it is all of us adopting and accepting it, just like fiat currency, but instead you don't have the government to bail people out. Any other quick questions before we go on the roller coaster of Bitcoin? No? Okay.
Yes, Cooper.
Oh.
So basically, if I'm understanding this correctly, this is taking out the institutions, but there is institutions out there who are benefiting from these trades that are happening.
Yes. So you're right. It is all, so it's all in the hands of the general public. And that was the goal, is to take it away from these institutions and put it in the public. But obviously, what's going to happen? Well, there's going to be companies and infrastructure put in place to profit off of that, for sure, 100%. And so that's definitely something to keep in mind. And I guess there's been some like blue screen on my thing, so I'm gonna stop and reshare just real quickly, see if that fixes it. Is that better? Okay, great. Okay, so let's go on the roller coaster ride of Bitcoin. Let me just kind of explain, okay, how it started. We talked about that, but what led to some increase in popularity and so on and so forth. So Bitcoin established October of 2008. And in the following months, the first block and first transaction is completed. First transaction is ever completed. And that was in May 22 of 2010. And it was another computer programmer, because at this time, honestly, all of the people who knew about Bitcoin were pretty big computer nerds. And this programmer thought, man, this is really cool. Let me try to order some pizzas with it. At the time, those 2 pizzas worth $25 cost him 10,000 Bitcoins, which will probably go down as the most expensive pizza ever, because at its peak, you can see it was worth $675 million. But at that time, it was only worth $25. It had a long way to go. And so you can see it start to trend upwards and start to gain some popularity, at least within a certain division within the public. And so over the course of time, and you can see about 3 years or so, 1 Bitcoin is now worth $1. Again, not backed by anything, but because there has been a demand for it, people are accepting it, it drives the price of Bitcoin up, and now it is worth what was worth $1. And that theme continues, and it begins an upward trek up until it reaches about $1,200. So 1 Bitcoin worth $1,200. And at this point, Bitcoin, it was kind of a little bit of a golden pony. There wasn't really anything drastic that's happened. And then it got its knees taken out from under. And what will go down is probably the largest heist ever completed. The largest online exchange, so the largest platform that allowed you to transact in Bitcoin, was hacked and lost over 600,000 coins. So that was worth over $40 billion at its peak. And this was a major, major problem for Bitcoin and cryptocurrencies as a whole. But actually, it didn't really stop other companies and initiatives from investing and taking place in Bitcoin. So again, it crashes, but then it starts to come back and rebound and grow. And all of that kind of surmounts into 2017. This is probably the first time many of you heard the words Bitcoin, because this was the first time it actually hit mainstream media and the public. This is the first time I actually heard about it, and it reached almost $20,000. Now, we've probably all mentioned this or heard this in the past, is when everyone's talking about something, when everyone's buying something, you should probably stay away from it. But unfortunately, we have FOMO, fear of missing out, and we want to get in. And so unfortunately, a lot of people put their money into Bitcoin and other cryptocurrencies at this time, not necessarily knowing what it was and what the risks were. And shortly following, they lost a lot of money. And so you can see with Bitcoin, it is up and down, and it is quite a roller coaster ride. But it continues moving forward. And again, all of these major companies are saying, okay, there is some value here. Can we be people who extract that value out of it? So we have major companies investing in it and developing initiatives, and it's growing in popularity. And actually, there are funds that are created and things like that. And then what happens? March of 2020. I think again, everyone probably remembers what happened March of 2020. Global pandemic hit. Everyone now has to go home, stay at home. There's nothing to do. No one is spending the kind of money that they were before. So it was the perfect storm for cryptocurrencies, the perfect storm. Because again, people were online on the internet with nothing to do. They weren't spending the type of money that they were before. And the Federal Reserve, in order to combat a possible recession and global pandemic, decided, hey, let's inject all the money we possibly can into the financial system. So everyone has much more money than they were used to. And a large portion said, let's invest it in cryptocurrencies. Let's invest it in meme stocks. Let's invest it in NFTs. And so it created this large, massive froth in the market. And the price of Bitcoin skyrocketed. And you can see November 8th, 2021, it reached its all-time high of 67,567, which was substantial. And this was the time where you could not walk down the street without hearing the words Bitcoin, Dogecoin, cryptocurrency, blockchain, the words to the moon, right? Like everyone was talking about it. Everyone was screaming about it. And a lot of you were asking us questions too. Hey, what is this? Should I invest in it? And we just had Super Bowl 57. It was a pretty good game up until the end. But in February of 2022, Super Bowl 56 was deemed the crypto bowl, because all these cryptocurrency companies were trying to get in front of you. They were trying to get in front of the public, and they were trying to say, hey, put your money here because it's safe and it's growing. And most of you probably remember this one over here, the QR code ad. It was a crypto company who just put a QR code out on the screen that moved around. And if you scanned it, it took you directly to their website. And pretty much everyone scanned it. I mean, I'll be honest, I scanned it myself. So this was known as the Crypto Bowl. Now, we just had Super Bowl 57. Not a single ad was run for cryptocurrencies. Not a single one. And why do you think that is? Well, obviously, there's been some declines in cryptocurrencies since then. And it all kind of, again, it started, not necessarily started, but it was further pushed when the Federal Reserve, again, March of 2022, so 2 years later, they started aggressively raising interest rates and saying, hey, now that the economy has kind of recovered and we've gone back to our somewhat normal lifestyles, we got to take some of this money out of the system. What that did is not only took money out of the pockets of Americans, but also major institutions and companies. And the companies who were the most leveraged or had the most debt on their books saw the most increase in costs and decrease in profitability. So high-tech growth companies are in that category, but crypto companies are as well. A majority of these crypto companies were highly leveraged and were not necessarily positioned well for downturn. So let's again ride it to the moon. Let's go as high as we can and not necessarily focusing on their financials. And so when they increase the interest cost, that increased the cost of all of these crypto companies. And in addition to that, cryptocurrency is dropping. So the price of Bitcoin is dropping. And a lot of these institutions and companies, they get their value from the cryptocurrency. So these two things drive a pretty downward spiral. And there's a couple big main institutions that became the face of these declines or these collapse. The first one was in May of 2022, Terra Luna. I'm not sure if any of you have heard of Terra Luna or what a stable coin is. I couldn't necessarily go into all the different forms of cryptocurrencies, but essentially what a stable coin is a coin that is pegged to, like, for instance, the US dollar. So one coin in Terra Luna was worth $1. And so these companies, these stablecoin companies, marketed themselves as a really safe investment because it would move with the dollar, and it was a form of stability. And then they would offer these savings accounts that would pay significantly higher interest rates than any other banks or savings accounts. Well, obviously that was not sustainable, and it caught up with them. And so stablecoin, no longer stable, it crashed, and tons and tons of customers lost all their money, which was really unfortunate because it was marketed as a safe place to store your cash. And again, this continued over the course of the rest of the year, all kind of surmounting in the collapse of FTX. I'm guessing most of you have heard FTX or seen a picture of this guy over here, Sam Bankman-Fried. He was known as a savant in the space and trusted by so many. It turns out when you pulled out the curtains, the company was just a fraud of a company. And there was billions and billions of dollars that were just missing, and they were fixing the books and telling investors and consumers that they had what they didn't have. And so customers who had money in FTX on the exchange lost $8 billion, just like that. They filed bankruptcy and it's all gone. And so these are some risks that you have to consider and you have to take into effect because it is truly the wild, wild west out there right now. There's not much regulation. There's not much protections out there. And so if you're going to invest in some sort of technology like this or buy in, you really have to have an understanding of exactly what you're getting into and be confident and know that, hey, if something were to happen and I lose all of my funds, I will be okay. I will survive. I'm not going to put my life savings in this. So that's kind of been the story, and I want to again reiterate that it is a mega roller coaster of a ride, and you have to, again, if you're investing in it, you have to embrace that. You have to accept that. You have to understand that. What questions do we have just on timeline and how things have gone up and down and stuff like that?
Cooper, I have a question.
Mm-hmm.
That one slide you showed Fidelity and Ameritrade and things like that. Is this putting like these companies at risk too for doing the Bitcoin? Yeah,
I mean, these companies, they're not investing everything into it. It's a very small portion of their normal operations. It's more so just a kind of investment in an initiative into research and development to be able to see, okay, can we do this? Can we do that? Can we make any improvements in the space that might pay dividends in the future? So just like how Fidelity has all these different platforms and different projects, Bitcoin is just one of those pieces. So if cryptocurrencies were to fall off the map tomorrow, Fidelity would still be well structured, well established, and not have any problems in terms of bankruptcy or anything like that.
So I'm going to assume that if you invest in this, you invest in Bitcoin or any other cryptocurrency with current money, whether it's electronic or physical.
Mm-hmm.
When you want out, how are you paid?
Yeah, it's a great question. And that's where the exchanges come into play. So we talked about FTX. There's another, the biggest one is called Coinbase. And those are all institutions that will allow you to redeem any cryptocurrency in exchange for dollars. So in the words exchange, they're exchanging one to the other. And for the most part, there's no transaction fees or anything associated with that, as opposed to exchanging dollars for euros.
So let's go back to what I kind of inferred at the very beginning. How are these people getting paid? Because nobody does anything for nothing, and this is a tremendous infrastructure that needs to be supported and paid for.
Yeah, I mean, a lot of the times when they're not charging you a direct fee, they're getting paid some way rather or another. You're right. Just like social media, you can use social media for free, but they are using you as the product. They're using you kind of as the money machine, right, or access to you. So similar form with some of these exchanges is they're getting you, and they can market that and kind of sell it to other companies sometimes. So again, you got to be wary of that. Okay. So I scared you guys just a little bit right there, I think, and showing okay, there are some drawbacks here, but what about the future? What does that look like? And the reality is, we're still just scratching the surface. Just as the internet back in 1999 was new and no one know exactly, okay, what is it going to do? What is it going to bring to our lives? What value is it we're going to derive out of it? The same can be said about the underlying technology of the blockchain, right? Cryptocurrencies use the blockchain, but there can be an abundance of other uses from this technology as a whole. And right now, that's what it's primarily being used for. But over the course of time, this technology is going to adapt, it's going to evolve, it's going to become more efficient. And our belief is not necessarily that these cryptocurrencies are what's valuable, but instead the technology behind it. And so what's probably going to happen is as this plays out, you're going to see an abundance of companies trying to attach themselves to blockchain and figure out, just like Donna with Fidelity, figure out how can we use this new technology to not only bring value to our pockets, but also to the general public. And so that is confusing to think about, but just as it was confusing in that video on the internet, the reality of the situation is technology is going to evolve, it's going to adapt, it's going to improve. And so we don't know exactly what that might hold, but the blockchain is here to stay. And there is a lot of innovation that's going to take place over the next 10, 20, 30, 40, 50 years. So as a whole, cryptocurrency it works well, right? I mean, blockchain has never been, the actual blockchain itself has never been hacked. It does its job very effectively in cutting out that middleman. But there are certainly some shortcomings associated with it. And that kind of goes into our investment philosophy. So cryptocurrencies as a currency is one thing. You're not necessarily investing in dollar bills. That is just a form of currency. You're not going to invest in dollar bills and 10 years later they're going to be worth way more. And so when we're looking at it from an investment perspective, we have to take a few things in consideration. One is just how severe that roller coaster of a ride it could be. And so I wanted to compare it to things that you're used to, that you see, that you use to grow your wealth. And so if we're looking at the volatility, that's measured by standard deviation. Now, standard deviation, just a fancy way of saying how normal or how much can one asset go up or down in any given year and it be completely normal. For the stock market as a whole, that is about 13.5%. So next year, the stock market could be up 13% and that would be completely normal, or it could be down 13% and that would be completely normal. The bond market, which, as you all know, is much more of a stable investment to, provide that stability, that life preserver, and some reliable income, it's only about 3%. Compare that to Bitcoin, over 70%. You put your money in Bitcoin, and the next year, it would be completely normal to be down 70%. And in fact, if you look at the frequency of these declines, you can see that a 30% decline in Bitcoin happens every 8 months, 50% decline every year and a half, and 80% of the time every 3.3 years. You can see the comparison to the stock market. And so again, when it comes to investing in these digital assets and cryptocurrencies, it is the wild, wild west, and it is purely speculative in nature right now. Because, John, as you astutely pointed out, there's nothing backing these currencies. There is no intrinsic value. So it's as if you're going to the horse track and you're throwing your money on a certain horse and saying, okay, who do I think might win? We don't know who's going to win. And so we're not going to invest your hard-earned retirement savings in something that is as speculative in nature. And just a couple more things in here. I wanted to just point out, and for the sake of time, I won't mention all of these, but there are a lot of risks when it comes to digital assets. Hostile government regulation. SEC just announced yesterday new rules and regulations around owning cryptocurrency and investing in it. Again, wild, wild west, and there is a lot of regulation that's going to come into play. That could cause some major implications in this space. There's always the possibility that alternative technology is evolved. So just as Bitcoin was dropped out of nowhere in 2008, tomorrow a new cryptocurrency that is improved and better and superior of a product could be developed and introduced and make Bitcoin obsolete. So that's a risk that you have to consider. Now we've talked about the asset loss, the hacking, the fraud, the error of losing your password. That's a consideration to have. The environmental consequences is talked about a lot because all of these computers, because the code is so intense, they use so much electricity to confirm these transactions. And obviously in today's world, we're becoming increasingly more aware of environmental implications. So the list goes on. And the point that I'm trying to get at is when you invest in one of these cryptocurrencies, you have to understand all of the risks associated with it and what it is and why it has been established. Because there are thousands and thousands and thousands of cryptocurrencies out there, over 20,000 right now. And so there's no sort of, like, you don't have to get a degree or any credentials to be able to create a cryptocurrency. If you can code and you're able to do it, you can create your own cryptocurrency. The most infamous one is Dogecoin. That was created as a prank by a dude who, with his buddies, decided, hey, let's create a funny cryptocurrency. And in the world of memes, it grew in popularity, and a lot of people threw their money in it, not knowing what it was. But the founder himself said, I created this as a joke. It's got no value whatsoever, and yet people throw their money into it. So again, it is still very much in its infancy, right? And it can seem very confusing to us because we're used to a certain system, but as a whole, currencies and the purpose of them make sense. We just don't know who the winner is going to be. And even if you guess the winner, there's no saying that you actually might make money off of that. And so again, we are not investing any of your funds in any form of cryptocurrencies right now. We're obviously monitoring it, and if anything were to change, you would be the first person to know. But as of right now, too speculative in nature. And although the technology itself and the idea and the principles behind it are very valid, right now it's way too early. All right, that's all I had. I am right on the hour right now, so if people want to hop off, please feel free to. I know people have things to do, but I will stay on as long as people want and answer any and all questions that you guys have.
Hey, Cooper. Hey, so
Yeah.
Bitcoin closely for the past couple of years, and I have to say you did a great job reviewing the space. So nice review of the history, and it is very volatile. And I agree with everything you said. It's a very nice review.
Thank you. I appreciate that. I was a little nervous that when you just spoke up that you were going to say, "Hey, you did this wrong." So thank you for that.
Yeah, I was going to ask you, when is a good time to buy, and what do you think of regulation? What's coming up with big companies and funds? But I guess nobody knows. So
that's the key there, right? I mean, if I had the crystal ball, I wouldn't be here. We've talked about this before. I would be sitting on an island right now, enjoying my mojito or pina colada or whatever it is. I will say, Shaquille, obviously now is a much better time than it was a year and a half ago. But I can't make any guarantees that it's going to continue its upward trend that has happened so far this year. And if someone tells you that, hey, it's definitely going to run up to 100,000 this year, you should run as fast as you can, because there's no guarantee, there's no promises in the investment world.
We want to thank you, Cooper. We're just going to leave our money as in paper.
It's absolutely going to take a lot of time. And I think amongst my generation, it is embraced a little bit easier than older generations, just because you're so used to, I was talking to a client today. He's like, I'm brick and mortar. I need things physical. It doesn't make sense to me. I can't embrace it if I can't see it, I can't touch it, I can't experience it. And this is not that whatsoever. So totally understand where you're coming from. And in full transparency too, I don't own any cryptocurrency.
Well, we appreciate your time, and I'm glad you're feeling better.
Thank you. Me too. Absolutely.
Cooper, I've got a question for you.
Yeah.
You said that the mining will expire or run out in 2140, I think was the date. Seems to me that, if there's no Bitcoin to be mined, then why would the individuals keep offering all this computer power to process the whole system?
Yeah. I was waiting for that question because I have that same question as well. And the answer right now is there's probably going to be fees imposed to compensate those individuals. Now, we have no idea what that's going to look like, but that is the only way for all of this to continue to function well. Because those, like you said, they have to be compensated somehow. Right now, there's an increasing supply. When it's limited and static, it has to come from somewhere, and the only place it can come from is additional fees.
Yeah, I didn't know if they were expecting some kind of technology improvement to make the computing power so cheap that it really didn't matter.
So that's a good point. There has been some changes, and not to get in the weeds of it, but right now, Bitcoin uses something called proof of work, where every single computer has to agree that and confirm the transaction. There are other functions, and this, again, not to get granular, that are a lot more energy efficient and environmentally friendly, but they don't have the full and utmost security that Bitcoin has. And so there's some trade-offs there. So Bitcoin in and of itself is somewhat limited with that, but absolutely there has been evolution, there has been alternative technology already established, and there probably will be more in the future. We just don't know what that is. What other questions do we have? I'll stop my share too. Sorry. Nothing? Okay. Well, thank you everyone for joining. I very much appreciate it. And again, I hope I didn't make your head spin around 1,000 times, but it's very complex stuff, and it's new and it's unfamiliar. And the best thing that we can do is just continue to learn and be educated and make decisions based off of that. So again, thanks everyone for joining. Again, the recording will be available, so I'll make sure to send it out to everyone. And we will we'll see you at the next event. Bye-bye.